Sooner or later someone is going to knock on your door. And guess who it is? Inflation. Inflation means a sustained increase in costs across an economy over time, resulting in a decrease in purchasing power of a currency, often the result of an increase in the money supply or scarcity of goods. It might not come this year, but you better prepare early enough, so you don't get caught off guard. In this video, we are going to show you 3 simple ways on how you can protect yourself against inflation. In the past year, we have been seeing money printing like no one could have imagined. With COVID as a catalyst, the government had to print a lot of money to save big companies and feed their citizens. Saving and supporting sounds very nice, but there is a price we have to pay for this. At first, you might think, it's great. The government sends me free money. But think again. If everybody gets free money, that means the money supply increases drastically. And here's what's key. The amount of goods and services does not increase. What happens if the same amount of goods and services faces a larger money supply? You've guessed it, prices rise. So what can you do to protect yourself from inflation? Here are 3 things that we are doing right now. The first thing on our list is buying real estate. But don't worry, you don't need a big amount of money to start. But why is buying real estate during inflationary times effective? The reason being is that everyone tries to spend their cash. Therefore, the demand for other asset classes rises. Real estate benefits from inflation in 2 ways. On one hand, your rental income increases, and at the same time your property gains in value. It's important to remember that cash is actually the worst asset to hold during these times. So how can you buy real estate if you don't have hundreds of thousands of dollars lying around? What we like to do is buying REITs. REITs stands for Real Estate Investment Trusts. You invest in companies that purchase office buildings, hotels, and other real property. This gives you exposure to the real estate market and you don't have to maintain any properties yourself. And if you want to sell, it's super easy. The market is very liquid and it takes only a few seconds to sell your position. In this example, we chose the Vanguard Real Estate ETF. You need to sign up with a broker. We use eToro because the interface is very user-friendly. But you can use another one as well. Search for the Vanguard ETF. The ticker is VNQ. You can find historical price data on the chart. If you decide to buy, simply click Trade over here, and select how much you want to spend. Besides going up in price in the long run, the ETF also pays dividends. Over time you can build a nice passive income stream. Moving on to the next thing on our list, and my personal favorite. Buying gold. But not just any gold, PaxG. It's gold put on the blockchain. 1 token of PaxG is backed by 1 ounce of gold. This is useful in many ways. First, you don't have to store your gold yourself. Second, you can sell it very fast and easily. I will show you in just a second where to buy and sell PaxG. But most importantly, you can earn interest on your gold. Using sites like Crypto.com or uHodler. Then you profit from inflation in 2 ways. Similar to real estate, the gold price goes up and you earn more interest. If we take a look at the history of gold during inflation, we can see that it had a massive run between 1970 and 1980. In my opinion, we will see something in the nature of this. Given its limiting supply, I can't imagine gold staying under $2,000 in the next years. With that being said, let's find out the best places to buy PaxG. That's Binance or Crypto.com. All the links along with some bonus offer, if you are a new customer, you will find in the description. Today let's head over to Crypto.com. Once you are on the exchange, you want to type in PaxG at the search bar. Select the USD trading pair and decide how much you want to buy. After you have bought your PaxG, here is the cool thing you can do. Stake them on Crypto.com or uHodler to earn a nice interest rate. This way you have added another passive income stream. Moving on to our last tip. Buying Bitcoin. That's not a big surprise since we love cryptocurrency. But I have to mention, out of these 3 options, this is the riskiest one. Simply because Bitcoin doesn't have enough historical data. It has been around since 2009 and we will have to see how it will perform during inflationary times. But given its limited supply of 21 million, it's a great asset to own. And you can earn interest by staking it. I use Crypto.com to stake my Bitcoin. Currently, that earns me 6.5%. Those were the 3 assets that we are buying to prepare ourselves for inflation. If you want to take less risk, you best it with buying gold. As I mentioned earlier, it's my favorite, and I think it has the best entry point at the moment. However, it's probably more important that you take action by learning about these things, and then decide what to do. If you have watched this video, and start to questioning paper money, my job is done. Let us know in the comments if you use other asset classes to protect yourself from inflation. Thank you so much for watching all the way through. Don't forget to subscribe, and we will see you in the next video.